Good morning, good afternoon, good evening, investors. I'm Taylor Watson, What's Investing, and this evening we're doing our usual Sharesies update. Today I'm doing kind of a double again. I have already recorded kind of January's December review, but it's just been a while since I didn't get around to editing, rendering, and uploading it, so I'm just going to do this as a 2-for-1. Because I think I also messed up some bits here and there in the other recording. So I've actually already invested when I recorded at 25 for the other part of the video. So I did 25 plus 3 because our subscribers went up 3 from 301 to 304. And then for this one, since there's been no subscriber growth, I'll just put in the usual 25 into Triple M. And if you're new here, basically every video I upload, I put 25 USD into Triple M, our subscriber stock basically, and then for every subscriber, I put in $1 per subscriber USD into Triple M as well. And I generally try to do monthly updates on the portfolio, and that is basically how this all started. Yeah, it originally started on like an ETF. I think it was like a water fund or a sustainable thingy, a New Zealand ETF when we first started it. But then once the US companies got released on Sharesies, I instantly wanted to switch it up and get it on something that's a bit more likely to have good returns and just have a bit more interest, as in like actual interest, not like numerical interest, but I don't even know what to say, emotional interest, that's the way. Basically, I'm a lot more interested in Triple M than I was a water fund. Triple M, I see their products in stores, I see their products getting delivered to businesses around me. It's a lot more tangible to invest into, and it's a lot more interesting for me in that sense as well. And the dividend is far better to see coming along. And I think the dividend is actually coming pretty soon, because it normally is in March and we're in February now, so it's actually coming up pretty soon. And our last one was almost 5 USD, so that was based off 4.8 shares. Now we've got 5.3, so we should definitely be above the 5 USD. And I think it just announced a dividend earlier today, or maybe even the day before, for $1.50 USD rather than $1.49, so it's like a 0.7% raise or something, but a raise nevertheless, and 1 cent per share more, so that's an extra 5.3 US cents for us. So something is there still. In our last video that we kind of uploaded the day before Christmas Day, so almost 2 months ago now, we had about $10,000 in the portfolio, and since then we have put a little bit into the portfolio. So wallet top up, so maybe $600 into the portfolio, but we've also done money out as well. Oh, that was all prior to then. So yeah, we've put in another 600. So when our last video was, yeah, we had like 10.2k portfolio value, and we've put in 600. So assuming everything else is the same, there'd be like 10.8. So we've actually made, well, recovered and then gained some of those losses. And yeah, so our unrealized gains are still just in the negative in terms of the capital value of these stocks. Our unrealized currency gain in terms of the USD versus NZD is positive by $600, which is sweet as. The gains from some of the sales we made on both currency and capital is sweet. So that's from our December sales. And the transaction fees are taking a wee hit. Sharesies recently increased their transaction fees. I think they're still mostly cheaper on the lower amounts invested, which is roughly where I'm at the moment, because I'm not doing very big transactions that often. I think you can also subscribe to like a monthly or yearly thing to get your fees capped or something. I don't think it's too beneficial for me at the moment. Haven't had the time to look into it. Well, I've had the time, but haven't prioritized the time to look into it just yet to see if I should start diversifying my portfolio into, say, Hatch, Stake, Tiger Brokers, and I don't even know what the other ones are. Investopedia. No, I don't even know what it is. There's a few other more complicated ones and a bit more focused on kind of performance of stocks and stuff rather than it looking pretty and having fruit everywhere. They're a bit more bland and mundane and investing focused. So I'm going to have to look into the fee structure to see if I want to start spreading out my investments across platforms, because it could be good just in case platforms do fall over. But I think most of the New Zealand ones use Drive Wealth, which is like a US subsidiary or something. So I think they're all kind of connected to the same thing still. But I'll have to do a deep dive when I've got some time to get really into the boring details of it all. But yeah, in terms of our portfolio, like I said, it's made some huge gains over the recent time. So back in our last video, we were sitting at negative 1.3. Well, that's when we uploaded it. I don't actually know when we recorded it. I could look into it, but we recorded it somewhere after these sales around here, and we were down 1,000 or more, and now we're up roughly 2,000. So it's a $3,000 shift just like that, and we've only invested kind of $600 to even help enable that. One of the things you will notice that is different is we don't own Realty Income Corp anymore. So Tesla, our biggest holding, had a massive drop, and it just kept dropping and dropping and dropping, and I was buying down because I was like, this is just getting ridiculously stupidly priced. And then it even went lower than that. Like I thought below mid 200s, mid 300s was getting low, because the way I value the company, and then it just went even further, and I don't currently have a massive amount of cash available because I've been buying a house, paying lawyers, paying dentist, and went on a wee Christmas New Year's trip, so I wasn't prioritising investing too hard at the time. So I didn't have the cash around this time here. This is literally when I was on holiday, and just didn't have the cash. So I sold out a Realty Income Corp, which was like 600 or 800 USD, and made two buys. One of them was here. That might have been my $500 wallet deposit that I showed earlier, and this might have been the Realty Income Corp sale. And actually on both of these days, I got it at 110 per share, so $10 or $11 lower than that close price on that day, and then $3 lower on that day, and now it's up in the 200s. So that's like a 80% return on that money put in, and it was 1,500 NZD. So yeah, made, I don't know, $1,200 just off doing that. Sold Realty Income Corp again as well. Missing out on those dividends, of course, and Tesla could go back down, so it all doesn't matter until the long term plays out. But that is what's been happening, and was pretty stoked to be able to get in down there, and still making buys, of course, when I've got the cash coming in. So we've got a bit left in the wallet, which will probably just kind of spread out into our little things. I like to do, once I get a dividend of like $3, $4, $5, is just to put in a bit more than what the dividend was, just so the dividend not only compounds back in, but I'm adding a bit more into it, just to make it feel bigger and better. And yeah, Apple has done its fair share of volatility recently too. Like it, if you spread it out to the long term, it kind of looks a little bit flat. Oh, not really. The last 3 to 5 years have been actually pretty just volatile, as for most stocks. Yeah, so Apple was sitting around 180s, then down to 130, back up to 170, back down to 140, back up to 150, back down to 125, back up to 150. So I focused most of my money on Tesla during the main drop period. As you can see here, there's been no buys since October, even during the drops down, just because I haven't had the cash coming in. Once the house that me and my partner have bought has kind of finalized properly, like we've got everything signed, we're locked in to buy it, we've got the deposit down, but it doesn't finish building for another until halfway through the year or more, so we can't like settle the loan and get finance fixed on it and get any floating rate mortgages, kind of anything like that set up for a few months still. So until that's finalised, we know what our budget is, how much extra we've got, kind of set up electricity, internet, water, paying the insurance, contents insurance, house insurance, and all the sorts. So we've got a good gauge on what cash flow is going to be like and leftover cash after buying some furniture that we don't already have and stuff like that. I'll probably do my 2023 investing goals halfway through the year rather than at the start, as I usually do, just because it's going to be a bit... the future's a little bit unforeseeable at the moment because I'm going through big changes. So the investing videos will be pretty update-based rather than... or kind of market updates rather than investing updates, because I won't be doing too much investing. It'll mostly just be reporting on the dividends, any interesting information about the stocks that I'm aware of, and just kind of going through the dividends. The portfolio tracker's had a massive update. Been working on that in my spare time because it's been pretty fun, and we'll get into that shortly. Basically Hatch, the performance has been going all over the show. We actually almost went negative at Tesla's lows, only up 1.8% after Hatch's fees. So, investment was looking pretty poor at that point in time, but I knew it would. I know Tesla's going to pay off in the long run. I don't know. I'm just fairly high conviction into the stock, and obviously if it goes poorly, well, it's just a bit of a sore thumb moment right there. But it's paid off so far. And we're back up to the up 83%, which actually looks quite small in the scale of things when we were up 200 and something percent. Of course, in hindsight, maybe Tesla was too highly valued at the time here due to just the market kind of I'm actually learning quite a lot about how the market works by watching Tesla, because even at this price point here, I was buying Tesla because I'm very confident that it's going to be even higher than that price point in the future, and I've discounted the return back to see it as a decent return still at the current day. You guys might not see it how I do, but I don't really have any public figures that I want to show, just because I like to keep my internal thesis there, just because it's always updating, and lots of it's just based on others' external research. I don't go right down to the source of the information because it's quite mundane and hard and a bit of a time waster, so I use a bit of faith in other investors, such as like Stephen Mark Ryan, Rob Mauer from Tesla Daily, Dave Lee, and Warren Relic, and just all the other Tesla community. Lots of them do the deep diving for me, and just based on the size of their audience and the positive comments and just general positive to negative ratio of their content and viewer base, I just trust and assume that the information is mostly correct and just base it off that. It may not be the best way to do it, but it's a way I'm comfortable with and my risk tolerance can handle. It just saves time, them going through the mundane and summarising. It just seems like a good way to do it, and I'm sure lots of you do it in a similar way or fashion, just using like third-party media sources for any stock information. I just basically go right from media to just individual creators that are just really focused, because quite often the media is just very broad, so they don't give you any details. They're not actually understanding the companies, whereas the individual creators are really in-depth about it, and they're a bit biased in terms of like the bulls. They'll be very biased on positive stuff, and some of their numbers are just a bit extreme on some things, but they do have an overall good picture of the company. That's how I like to summarize basically how I invest. And so to cover off the whole of our old portfolio, as I like to call it now, we received $100 in total for quarter four. The only reason we broke this is because we included some dividends from January from old stocks into December. So I think Pepsi was one of them, and maybe Visa paid out in January, like the early days of January, but we no longer own the stock, and I wanted to start our new spreadsheet fresh from January. So I just included those in December, getting us above 67 from the year before as well. And almost crossing the 300, getting our average dividends close to 25 for the year as well. Alright, I'm back. Just had a wee break to clear my throat. Had a wee tickle going on. So this has kind of not been updated, these numbers. My new spreadsheet has been. So we'll just kind of ignore these numbers. They're pretty rough now. Well, to be fair, these three things are fine, but this most recent one's a little outdated now. It doesn't really matter now because it's the old portfolio, but we'll just dive through it for one last time. And I might keep this tracker going and add in 23, 24, 25. Just keep it going as my all-time investment tracker. My all-time investment tracker, but just basically showcase it yearly rather than monthly, and showcase my new present-day one monthly as well. Sorry, I got a lot of burps coming on. Drank too much energy drink. So our dividends per month is looking like this. We've got our nice December spikes from Hallensteins, and our total dividends received over time actually crossed the 600, almost 650 after December, which is just insane over such a short amount of time. Like, for our first 6 to 9 months, we actually had nothing. So if you start it from here, it's really only, rather than 3 years, rather than 4 years, it's actually only 3 to get to that point. And if you continue the trajectory, you can just see it being in the thousands pretty quick. And hopefully we're going to catch up there pretty quickly as, got a new higher paying job than my last one's. Actually got a cool graph to show you with it as well. And we'll hopefully be lowering some of our living expenses by moving from our current situation, which is like renting, boarding, to living alone, because we'll just have a better idea on, because currently it's kind of just chaotic with the amount of people we've got in the house and the size of amenities and stuff, because we don't know whose is what, and we don't have good systems going. So it'll be nice when it's just two of us. We know what's what and we know what is, basically. Of course, the mortgage to rent ratio, that kind of cost of living is much higher, but over the long period of time, it will pay off, is the plan. And of course, there'll be a bit of capital gain and maybe some cash flow creation later on if we turn into rental, or pull out money and buy a rental. There's a lot of opportunities in the future that I'm pretty excited about. So hopefully we can actually just compound and invest and capitalize way past this in the long run. And super long term, Tesla announces a dividend. I don't expect it to be soon. I expect them to do share buybacks way before they do a dividend. Currently, I wouldn't want them to do share buybacks. I was a little surprised. I don't know how share buybacks work in the process of timing. Like, if a company has to announce it publicly months in advance, or if they can just privately file the action and then it becomes public as of when they're doing it or something. Because when Tesla was dropping, I'm like, Tesla knows their true value to a point, so I don't know if they can strategize buying it back at the right time or not. I don't understand enough about that sort of thing. But while all their competition is reducing investments into factories, they're increasing it and surpassing everyone's expectations and trying to get to that 20 million per vehicle goal by 2030. I'd much prefer they just reinvest capital to a point where they've got all of their basic manufacturing things to mass scale, to where they're at a point similar to Apple, where it's mostly about services and maintaining recurring revenue through insurance on, say, Tesla Insurance, FSD revenue, monthly revenue from that, the auto bidder fee structure from the solar, just maintenance on their megapack batteries through businesses, their superchargers and megapack and their mega chargers for like the semi, just all that recurring revenue, lowering costs through Tesla Bot and things like that. I think once they get to that point of just recurring revenue that's growing at a super high profit margin, I'd expect a Tesla dividend, and based on my cost basis compared to the share price at that point in time, I expect to get a good return on that and hopefully never have to sell out of Tesla and just keep the dividend going. Yeah, so that's enough ranting. We almost got our average dividends received by month over all time to 15. So that's over all time. Whereas our trailing 6 month got pretty close to crossing in the 30, which is super cool because that's double that in the recent 6 months compared to all time. And then our trailing 12-month dividend almost got to that 300. It was super, super close, but we didn't quite get there, which is all good. I'd expect we would, $300 in dividends. I'm saying we can probably get to 100 this year, because I'm also including bank interest now, which I'll show you soon. And getting back to 300 in 1 year, I don't think it'll happen next year, unless something drastic happens. But the year after, I'm bullish to get to 300 per for the year in dividends in 2025. I think that's a good goal to aim for. Someone can hopefully remind me of that, but I don't know if I'll write it down anywhere because I'll probably forget. Of course, our weightings are looking like this at the current stage. Realty Income Corp is gone, but I think we're about ready to go through our new spreadsheet. I'll just quickly scroll through this for one last time. It's so sad. All these stocks are gone. But it was nice to get these staircases of growing dividends through compounded dividend raises and just pure capital injection. It was just beautiful to see all these graphs growing, and of course, seeing some cuts, some big boosts, and it was a really cool idea I had just to make these all separate, because it's just really, really motivating seeing something like this, and we're going to continue this sort of thing on our future spreadsheet. So we'll get into that future spreadsheet right now. So I've created it's not scrolled up. I've created basically a landing page or a dashboard, and I've thought it would be nicer than me clicking through all of these little things down here and losing my place and clicking on the wrong one, that I'll just have this dashboard that I can just scroll up and down and basically just add to it and just keep it all on one screen. So I got the wee logo, got the name, got our establishment date, our subs, uploads and views. I'll probably automate these to actually update as the number goes up, because this is probably higher now and this will change hopefully faster and faster over time, and this just, it's a bit fiddly to edit. +1, +1, +1. We've got some little metrics here just to keep it not completely graph based, just to have some pure numbers there. So we've got the portfolio value, the returns, so that's just what I put in there last night at like 1 a.m, this morning. So roughly 3,000 gains, or 11%, 6 holdings, ignoring our cash savings, which we've added in, our wallet balance, which is now lower, that we've reinvested, and our cash that's just sitting in the bank. And then my OCD is like, I need 7 things because this is 7 cell or 5 or 6 cells or whatever. And I was like, I need to match it, and I couldn't think of one thing to put there, so I just wrote something. We've got our Tesla Sparkline graph just showing the last 250 business days, roughly a year, and then Apple as well. We've got our currency conversions, just quite a cool landing page, and we've got our normal graphs here. We've got Q1 dividends, total dividends 23, monthly dividends. We've got January at $11.89, and then February already up at $7.26. Got our weightings all named and color coded to fit the channel, black and white. So we've got Tesla at 54% weighting, and that is including our cash savings proportion. So without the cash savings, it is probably at 65% weighting in the portfolio. We've got Apple sitting there at second place, just above the cash in terms of value. And then we've got our top 100 covered call, high yield ETF, Triple M, our bond ETF, and of course NZX we've kept as well. In terms of these graphs, I've put our net worth over time graph into our dashboard, and I've actually updated this to include some things. So I'm actually been in the positive in the past now, and currently am in the positive in terms of net worth. So basically this was a lot more negative, especially these points here. But what I did is add in Basically furniture. So basically my wardrobe, drawers, my bed, things like that. Just added in a rough value of those because technically I own them, and I haven't gone off resale. I've kind of gone the insurance route of replacement value because if for some reason, basically how much I value it. So if I don't know, someone stole my bed, I'm gonna have to spend a few hundo, close to 1,000 to get a replacement bed for it. So I've kind of done that sort of valuation. Then in terms of clothes, I didn't go item by item. I just estimated roughly what I had, and then went through some of my spending to get an estimate, and kind of just increased my spending on clothes over time as I've gone through. Kind of like, I started it from when I turned 18, so I was just still in high school, so not really having an income or needing to buy clothes much because I wear a school uniform, and then went to uni, so it increases, and then got a girlfriend, so it increases, got a job, so it increases, got out of uni and gone to corporate, so I need more business clothes, so it increases. So I've just made my clothing value increase over time, just based on the fact that I'm buying more and the rate that I'm buying more is increasing. It's a rough estimate. It's basically gone from $10 a month to 20 to 30 to maybe $40 a month or something. So still quite small numbers in the sense of things like it's $500 a year on clothing, which it might actually be too low what it is in terms of the number I've estimated in there. But I've put that in there so it's a bit more true, the net worth thing. That's just the way I look at net worth. I've also added in my camera equipment, my computer setup, and the peripherals such as my keyboard, microphone, mouse, headset, that sort of thing. I've made those things depreciate over time. So when I initially bought my computer, it was maybe $3,000, $3.5. So I've depreciated that down at like $30 a month. So it's now $1.5. So opposite to the clothing, that's more of a resale kind of thing, or replacement value to get the same sort of quality, because tech, similar to why I invest in Tesla, is technology gets cheaper and better over time. So that sort of thing. And I've done the same with my peripherals because same sort of thing. Tech, it just gets better, cheaper, smaller, bigger, faster over time, that sort of thing. So I've done that, and then I think I did furniture, clothing, and just peripherals and stuff like that. So that's why my net worth is not as low as it was in previous videos and is now in the positive. So I've kind of added those things in. And I've got the house ownership in there as well. So my deposit and basically my amount put in per week, my ownership based to the value has been put in as well. And I have created a new graph here, which is income over time. So this took a wee while to make because I've had a few jobs throughout uni, the odd casual one here and there, and so I've gone all the way back to the same point of the net worth when I turned 18. So I had my first kind of job, I think it might have been roughly here. So I think this was one of its payouts. So I had a job at like a retirement village just doing like the kitchen hand and serving people food and stuff. Didn't do it for long, but that's where some of that income came in. Had a weekly allowance from the parents, so I put that in there as well because it was income, didn't have to pay it back, that sort of thing. Did a lot of odd jobs during uni, like the odd tutoring, photography, security at like social events like concerts and sporting gigs and stuff like that, like the rugby. Then I've got like payments from me doing my brother's taxes and like business spreadsheets and stuff, so I've just averaged what he paid me over the year into a monthly thing. Same with my photography business, just averaged it over a month. Well, averaged the year over months. And these are all gross numbers. That's just a way for me to keep these numbers as simple as possible because getting into all the different taxes at the time and all the different jobs, I just could not be bothered putting on all the data like that. So yeah, I just did it as gross. So my actual net income over time. I should actually write gross income in the title. I'll change that. Yeah. And then basically moved to Queenstown, got a job, was working probably 45 hours a week doing this, and then had a lot of commute time as well, and then went into the unemployment phase around here. So the reason this is still decently high is I had obviously my sick leave or holiday leave payout in one of these months, and can't remember actually why I kept it so high. Oh, I think, yeah, so it's the what's photography and what's jib stopping keeping me up as well. And then starting the new job as well put me straight back up to the same as I was on here, but I'm working less hours. So I was probably doing 45 hours average in this job. Now I'm doing 36 because I think it's a 40-hour work week, but get your breaks. So I get 30 minutes a day, Monday to Friday, and then an extra 30 Tuesday to Thursday, so an hour break on those days, so it's 36-ish. So I'm working 9 hours less a week to get the same, and that's just on the base. This one here is higher because I got a little bit of commission, but there was just 5 pay weeks instead of 4, so that's the main reason that's higher. This one, January, is way higher because I got a mean commission, so started obviously learning all the tricks of the trade, getting better at the job, getting better at selling certain things, so I got a better payout. This one is February, hence it's not got a title, it just says total. Same with this one. It's just an estimate because I did pretty good last month as well. Commissions get paid monthly the month after you did the sale, so January is from December sales, February is from January, etc. So that's an estimate, and then March here's an estimate as well. But this will probably go higher depending on how the rest of the month goes. And yeah, so that's basically how that's looking. Added in my investing in KiwiSaver. This graph might change because in a few months this KiwiSaver is going to drop to 1,000 and probably not have much interesting going on about it because I will be putting in the absolute minimum. I may stop putting money into KiwiSaver just because I think money now, like even though it is a 50% return on that government contribution thing, I don't know if that'll stick by the time I retire because I can't literally touch KiwiSaver after I buy my first home unless I go into like severe hardship, take a heavy hit on returns or something, or just declare retirement early. I don't even know if you can do that. Or it's just, they're telling 65 and retirement age might scale upwards due to health getting better in pills and stuff, so it might go up to 70, 75. I don't know the future. So it's a bit out of my control. Government might remove the whole employer has to match contributions. They might remove the 50% government thing up to $1,000 or whatever, especially when government's changing later this year. So those kind of things make me reconsider putting my money there, especially when I can't control it, can't take it out once it's in there. It just means my week-to-week pay is bigger as well. So this might change. I've made it red so you can actually see it against the investing one. And yeah, that is our portfolio update. And it's quite a lot easier now that I don't have to go through all these different graphs because all the important data is just right here in front of us. And it'll look cooler once we've got more data. And yeah, I've been talking too much, had too much to consume of fizzy beforehand, so I'm like holding in burps, trying not to burp this whole time. So not very professional of me, but it's a casual video, it's a casual kind of day. I think I've covered everything I want to cover, basically. Gone over the portfolio, the new spreadsheet, the general returns of the market, and our Tesla performance, as usual. So, happy investing. I'll leave it there. Actually, I won't leave it there. I'll go over one very important thing. So, it's not only dividends in these graphs now. I have added bank interest. So, since I've added my cash weighting in here, I've got bank interest involved. So, there's a burp coming out. I've really got to end this video. So, I got $5 in January and then $6.13. Yeah, so I got $5 total in January for bank interest. It'll probably be bigger in February because I got more money saved. that sort of thing. So I've included it in dividends per month, so just remember that. So that's going to keep us up there. I thought it'd be cool if I'm going to have a cash thing, because when the cash goes down, it's more money into investments, dividends go up, bank interest goes down. I thought it was relevant, so we're going to have it in here now. Yeah, so just keep that in mind in terms of your guesses and everything like that. That's actually what I got to put here. February dividend div guess. What do I reckon? We're currently at like 7. I got bank interest to come and maybe another monthly thing, because what's already paid? Globalix and Vanguard are paid. We've got bank interest and nothing else. I think there might be Apple or something. I'm not too sure. So got 7. I'll go for a $15 on the dot, and we'll make that green. What am I doing? Green. Oh, it's a bit darker than the rest, I think. But yeah. Alright, we've got our thing in there. Sweet. So, our February dividend guess is $15. Well, not our, mine. If you'd like to try and beat me, have a go in the comment section below. If you do get closer to the dividend guess, including bank interest, I'll give your channel a shout out if you've got a YouTube channel, if you've got a Spotify podcast, you've got a book you want me to read, any kind of thing you want me to shout out, as long as it's appropriate, just leave a comment below, beat me at the guess, and yeah, I'll give your thing. I'll check it out and give it a wee shout out, give some feedback, and yeah, that is the update. We're doing the outro for the 50th time this video, because I am losing track of what I'm up to. I should really script these. No, don't be silly. Alright, that is the end of the video, guys. Cheers for checking it out. If you stuck around all the way through my rambles and everything, cheers, and yeah, we'll see you next time. Hopefully actually do a monthly update rather than skipping every second month at the moment. So yeah, I'll try catch up in 2-3 weeks in the early to mid stages of March, give February a good dividend guess, and yeah, we'll review the portfolio back then, go over some Tesla news, because there's been heaps. I just had to ramble through my way through this video, and now I'm losing track of how to speak. So yeah, I'll go over some Tesla stuff in the next video, hopefully, and yeah, cheers for checking it out. See you later. Bye.